Financial literacy is a crucial topic, yet a lot of people are not really knowledgeable about financial literacy and how the financial system works. So, in this episode of the English Hour, I'll talk about financial literacy, its impact on our lives, and some of the key terms and questions that might help us understand the financial system. So, let's get started. As I said, money shapes our lives. Money shapes the lives of millions of people around the globe. It has a huge impact on our lives. Some people would like to ignore its impact, but it's there and it cannot be really ignored. And lack of knowledge really doesn't help anyone. And considering the impact of money in our lives, on the lives of millions of people around the world, I think it's best to understand it. And full independence is only possible with financial freedom. So after the Turkish War of Independence, Atatürk started to rebuild the country, to rebuild the economy, and he knew that the new republic would need a strong financial infrastructure. It would need a strong economy. Because without a strong economy, without a strong financial infrastructure, you would really be a slave to other countries. You cannot really talk about independence without financial independence. So, here are some of the questions that I think we should ask ourselves. How does money work? Do you know how money works? Do you know how money is created? If not, I would definitely recommend that you research these topics. Or what about taxation? The government takes a cut of our earnings. For example, it could be in the form of value-added tax, or it could be income tax. So the government taxes you. It takes a big cut out of your earning. But how does taxation work? What can you do to decrease your taxes? What about the markets, the financial markets, equity markets, commodity markets, stock exchanges, and so on? How do those markets work? Or at a personal level, are you thinking about your retirement? When are you planning to retire? Or what steps can you take to lead to a better retirement or to ensure that you will be financially safe in retirement? And maybe more importantly, what is inflation and what causes inflation? And how can you protect yourself from inflation? These are some of the key questions. And I believe that if you can answer those questions, you will be in a better shape. You will be in a much better position to protect yourself and to protect your family financially. So, for example, here I'd like to talk about a few important concepts. We all know that savings are important. So it's important to save for a rainy day. It's important to save for the future because you might need it, there might be an emergency, and so on. But unfortunately, there is an important lesson that I learned too late, and it's this: cash loses value. It's not a good idea to store your savings in cash. For example, it could be Turkish liras, it could be US dollars, it could be Swiss francs. All forms of cash lose value over time. Some depreciate or lose value faster than others. For example, in the past 10 years, Turkish lira has lost most of its value against the US dollar. So Turkish lira has depreciated a lot, and it really reduced or decreased the purchasing power of Turkish citizens. But from an American's perspective, the US dollar has also depreciated. For example, in the last 100 years, it lost about 90% of its value against gold, which is a historic store of value. So modern currencies that are printed by states, by governments, by central banks, a lot of them tend to lose their value over time. And this is simply because the governments do not really carry out strong or healthy economic programs. They tend to inflate their money. They tend to print more money than the services and products that are generated in the economy. And this is an important lesson. So if you save cash, That means you will lose your purchasing power over time due to inflation. For example, in Turkey, the official figures claim that the inflation is around 15%. But if you ask any average person on the street, they will tell you that the inflation is more than 30 or 40%. So this is a very important point. And in the case of the US, the inflation is set to be around maybe 2%, but these are government statistics. There are different institutions in the US measuring the consumer price inflation, and they claim that the inflation is somewhere between 5 to 10%. So inflation around the world literally decreases the purchasing power and the savings of the citizens. So it's important to find places where we can save our money, where we can store our savings safely. Sometimes people think that commodities such as gold, oil, silver, platinum, and other precious metals might be a good store of value. And sometimes people think that cryptocurrencies such as Bitcoin, Ethereum, and other upcoming projects could be good stores of value. Honestly, I don't know the answer to this question, but I can definitely see them as reasonable hedges against inflation. So here is another important concept: assets versus liabilities. And I wish I learned this much earlier. Assets are basically things that you buy that are contributing to your financial freedom. And liabilities literally take money out of your pocket. Liabilities are basically expenses. Assets are generally cash flowing or income generating properties or tools. For example, let's consider the example of land versus buying the latest phone. So when you buy the latest phone, it's a depreciating asset. It's a liability. For example, in a few years, it will be obsolete. It will lose most of its value. But if you buy land or if you buy tangible goods that can retain their value over time, they will probably appreciate. They will probably keep their value over the long term. And I think when you sell them, you will be able to sell them at a profit. Or let's consider the example of buying a rental property versus buying the latest and the greatest car. So when you buy the latest and the greatest car, of course you will derive pleasure from it. But then cars generally depreciate. In the US, they depreciate really fast, but in Turkey, due to the exchange rates, cars tend to retain their value. But in general, cars depreciate. When you have a rental property, it can bring you additional revenue. It can help with your financial independence. So assets versus liabilities are an important topic. And as I said, assets are basically things that bring you cash flow or that retain their value, and liabilities are basically things that cause expenses or that lose value or that depreciate. So when you're buying something new or when you're planning to make a big purchase, I think it's important to think in terms of assets versus liabilities. This kind of thinking can really help with your savings and with your retirement planning. So to wrap things up, I think it's very important for us to learn about money management. We need to be able to manage our money. But in order to be able to manage our money, we need to learn how the financial system works. We need to be able to learn how inflation and taxes work. And when we have a grasp of these topics, I think we can take steps towards financial independence, and we can better protect our savings and we can better protect our future, because whether we like it or not, finances or expenses are an important part of our lives. Well, I'll see you in the next episode, and bye for now.